Weiss+Associates presents Defeating a Notice of Intent to Levy. This video addresses the Notice of Intent to Levy enforcement action created by employees or agents within the Internal Revenue Service toward those who are not legally imposed with the obligation to file and pay the federal income tax within the limited territorial jurisdiction that the income tax is uniquely applicable toward. Before we continue, it's vitally important that the viewer understand the following information. The federal income tax scheme is perfectly legal within the federal territorial jurisdiction to which it was designed and intended to be operational within, based on the U.S. Supreme Court in the Pollock v. Farmers Loan and Trust case. Weiss+Associates emphasizes that it has no issue, challenge, or argument with the national government for its legality and limited application of the federal income tax as written by the 16th Amendment. Weiss+Associates agrees fully that those who are legal U.S. taxpayers should and must file and pay their obligations to that government within those parameters. However, it must be clear that the 16th Amendment, which established the federal income tax, is not law within the constitutional republic, the current 50 states of the Union, as stated by the Constitution and the U.S. Supreme Court. The Supreme Court case Pollock v. Farmers Loan and Trust Company determined that an income tax is a direct tax and that the national government is required by Article 1, Sections 2 and 9 to adhere to the rule of apportionment before it could ever be applicable toward American nationals living and working in the 50 states. The legislative intent of the 16th Amendment, written by former President William H. Taft in 1909, acknowledged that the national government was deprived of any power or authority to levy its federal income tax against any American national, referred to in Title 26 of the U.S. Code as a non-resident alien individual. Taft stated this due to the fact that the national government sought annual tax collection revenues from incomes which are restricted by a direct tax. Taft thus declared that, "I therefore recommend to the Congress that both houses, by a 2/3 vote, shall propose an amendment to the Constitution conferring the power to levy an income tax upon the national government, without apportionment among the states in proportion to population." Jurisdictionally speaking, there is only the territorial jurisdiction within the District of Columbia and its U.S. territories for application of this federal income tax. The Supreme Court stated, and Taft concurred, that this direct tax was not within the power of the federal government to impose unless apportioned among the several states according to population, meaning the rule of apportionment. The exact wording of the 16th Amendment, to which many have never paid the full attention to, reads as stated. "The Congress shall have power to lay and collect taxes on incomes, from whatever source derived, without apportionment among the several states, and without regard to any census or enumeration." Thus, the federal income tax is not law within the constitutional republic, and cannot be lawfully imposed against any American national unless they make a voluntary election under IRC Section 6013 G or H to permit the national government to levy its income tax against them. By granting that permission, American nationals allow that government to tax them as if they were U.S. resident aliens, and not as American nationals, as stated in 26 CFR Section 1.871-1A. This voluntary election was established sub silentio, without full disclosure of the ramifications on the part of the national government. Without full disclosure, there could never be evidence of any willful and knowing intent on the part of the American national who made such a stated voluntary election under IRC Statute 6013. Now, on to the discussion on the particulars related to the Notice of Intent to Levy. The IRS will send either a letter LT11 or letter 1058 stating their intention to create a notice of levy. Levy action letters have a short 30-day period from the date of the letter to respond back to the IRS, or else they'll continue with the notice of levy and start their attempt to garnish your wages from your private sector employer, retirement payments, or Social Security payments. Weiss+Associates has years of experience on how to properly address this matter. It's important that this issue be addressed immediately in order to move effectively against the IRS claims of tax liability and enforcement authority the IRS proclaims it possesses. If you haven't reviewed our YouTube videos on revocation of election and jurisdiction by now, you should do that, so that you'll have a broader understanding as to the nature of the federal income tax as a direct tax made against American nationals who are being treated or taxed as if they were U.S. resident aliens, as stated in 26 CFR section 1.871-1A. By this regulation, American nationals are non-resident alien individuals. U.S. taxpayers fall into 7 categories. 1. Federal employees, federal officers, and elected federal officials, as stated at IRC section 6331A. 2. U.S. resident aliens, as stated at 26 CFR section 1.871-1A. 3. Statutory U.S. persons, as defined at IRC section 7701A30. 4. Statutory U.S. citizens, as defined at 3C Amjur 2D section 2689, not to be confused with those who are American nationals. 5. Those who derive income from the use of federal property, as stated at IRC section 861A. 6. Non-resident alien individuals who elect to live in U.S. territories, American Samoa, or Puerto Rico. And 7. Non-resident alien individuals who make a voluntary election to allow the national government to tax them as if they were U.S. resident aliens. So, the starting point is, which type of U.S. taxpayer is the IRS claiming you are? The vast majority of American nationals are being presumed to be number 7, non-resident alien individuals who made a voluntary election. But when you ask those American nationals if they were informed by the very government personnel who have taken oaths of office to protect and to defend the U.S. Constitution, none have ever told us that they were provided by the government with full disclosure of the ramifications of making such a voluntary election. None of those American nationals have told us that they were aware that they're actually being taxed by the 16th Amendment as if they were U.S. resident aliens. Without awareness, it's impossible to have acted under a willful and knowing intent to be participants of the federal income tax, which was never made law within the constitutional republic. Can it be said that the expression voluntary election is really voluntary if you have no idea that one is being played by social custom, when they were never told that they may elect but were never required to elect to be taxed as if they were U.S. resident aliens? Here's 26 CFR section 1.871-1A that states these facts, and they may elect but are not required to elect to be taxed as a U.S. resident alien. Remember, the word may is a permissive word and not an obligatory word. The origination of the levy starts with the filing of a U.S. individual income tax return. Those who are legally required to file and pay were shown earlier. The problem for the IRS is when parties do not file a return. The non-filer department within the IRS then creates a fraudulent act by self-creating a substitute for return for the non-filer. The IRS routinely claims that under IRC section 6020B, they have the authority to create a substitute for return. But do they really have the authority or power to create a substitute for a Form 1040 federal income tax return via IRC 6020B? It's true that the IRS makes such claims, and they do so in their own correspondence. But when one looks at the Internal Revenue Manual at section 5.1.11.6.7, Substitute for Return Authority, you'll immediately see that there are 8 tax forms the IRS has authority for which to create a substitute for return. What is noticeable by its absence is the complete lack of reference to the Form 1040. Without legal authority, the IRS creates hundreds of thousands of substitute for returns and does so blatantly in disregard for the complete lack of authority to do so. That is fraud on a wholesale level. But the IRS doesn't stop there. They continue their fraud based on the fraudulent substitute for return by creating an assessment and then a deficiency, soon followed by a notice of intent to levy. All this is done under fraud initiated by the creation of a substitute for return authority that simply does not exist. This fact is true even for those who are legal U.S. taxpayers as referenced earlier, with one exception. That exception is stated at 26 U.S.C. section 6331A, and it only applies to those who work for the national government when they don't file and pay the income tax for the privilege of holding a public office within the national government. Routinely, the IRS prefers to hide this fact of IRC section 6331A when it supplies a copy of excerpts from the Internal Revenue Code, and it starts the presentment without showing item A, as it starts with 6331B. You might by now be asking yourself, why did the IRS do this? To start with a possible answer, you can look at IRC section 6331A, which only references those who work for the national government as being targets for the levy being placed on their incomes. There are additional reasons that might also explain this avoidance of the truth by the IRS, hiding the IRC section 6331A statute, and they can be found at 1. The U.S. Supreme Court case Pollock v. Farmers Loan and Trust, which declared the federal income tax to be a direct tax and not possible to be imposed against American nationals without reference or inclusion of the rule of apportionment as required of the national government at Article 1, Sections 2 and 9 of the Constitution. 2. The legislative intent of the 16th Amendment, written by former President Taft in 1909, which stipulates that the national government was deprived of any power to impose an income tax against American nationals, as we refer to those living and working in the constitutional republic. This foundational document went on to state that the authority to levy an income tax was only directed toward the national government, meaning those individuals who worked for it in a public office or who were born in one of its territories. And 3, the actual wording of the 16th Amendment, which purposely omitted any inclusion of the rule of apportionment. The Congress shall have power to lay and collect taxes on incomes, from whatever source derived, without apportionment among the several states, and without regard to any census or enumeration. All you need to do now is refer to the U.S. Supreme Court decision in the Pollock case, and you realize that the federal income tax cannot be legally or lawfully imposed against American nationals. A question often is asked, how can the U.S. government omit the rule of apportionment when the Supreme Court and the U.S. Constitution requires it for any direct tax? The simple answer is that there are 2 jurisdictions, and both have the same name, United States, with different laws for each jurisdiction. The confusion has arisen due to the lack of understanding by American nationals as to this being the fact. So, if you're a type of U.S. taxpayer who works for the national government as a federal employee, federal officer, or elected federal official, then the IRS is perfectly correct in levying you if you fail to pay the kickback to the national government for the privilege of holding that public office. Those who work for the national government have a domicile or tax home in the District of Columbia, per IRC Section 911D3. This is a fact either by geographical domicile or by statutory domicile when they reside outside the statutory United States. This is evidence that the 16th Amendment can and is applied directly to those who are legal U.S. taxpayers. However, for those who are not legal U.S. taxpayers, but have been duped into submitting to the territorial jurisdiction of the national government so that it can tax them, well, that's another story altogether. That group we're referring to are those who are stated by the U.S. Congress to be non-resident alien individuals, as expressed by 26 CFR Section 1.871-1A. A non-resident alien is a euphemism for our non-statutory term, American national. In order to try and provide more clarity regarding the IRS procedures, such as substitute for return, assessment, deficiency, notice of intent to levy, or notice of levy that can only be directed toward those who are subject to the territorial jurisdiction of the national government, one only has to read the federal appellate case Long v. Rasmussen. This court stated very clearly that there are 2 separate groups in regard to federal income taxation, taxpayers and non-taxpayers. The revenue laws are a code or system and regulation of tax assessment and collection. They relate to taxpayers and not to non-taxpayers. The latter are without their scope. No procedure is prescribed for non-taxpayers, and no attempt is made to annul any of their rights and remedies in due course of law. With them, Congress does not assume to deal, and they are neither of the subject nor of the object of the revenue laws. There are those who are lawful non-taxpayers of the federal income tax, or else why would the federal appellate court make such a demonstrative reference to those who are without duty or obligation to file and pay the federal income tax due to their status of being lawful non-taxpayers? So, when the IRS attempts to impose a procedure against one who's never willfully or knowingly, or with full disclosure of the ramifications, submitted to the territorial jurisdiction via the sub silentio actions of that government, it is an unlawful act. That act has all the elements of a fraud being perpetrated against those non-statutory American nationals, aka non-resident alien individuals. An interesting side comment pertains to the U.S. Department of the Treasury statutory laws. You will find stated in 31 U.S.C. section 321 D1 and D2 that the federal income tax is stated to be a gift or bequest made payable to and for the use by the United States, meaning the national government. As you might imagine, a gift or bequest is not a mandatory obligation for anyone to be compelled to make. Thus, the federal income tax is again stated by the national government to be a voluntary act with no compulsion or requirement to file and pay such a tax. This is substantiated by former federal attorney Michael L. White, who served in the office of the Federal Register, and made the statement as he represented the national government by his legal opinion that our records indicate that the Internal Revenue Service has not incorporated by reference in the Federal Register a requirement to make an income tax return. He also stated that there are no corresponding entries for Title 26 in the CFR Index related to IRC statutes at 6201 Assessment, 6321 Lien, or 6331 Levy in the Federal Register, but they do exist for 27 CFR for alcohol, tobacco, and firearms regulations and isn't related to the IRS. There's still much more that can be presented on this topic when it's based on presumption by the IRS toward American nationals who are neither of the subject nor of the object of federal revenue laws. Should you receive any such notice of intent to levy and you have not filed a Form 1040 return for that tax year, then we ask you to go to our website. Send us your personal statements to each of the 5 strict criteria that we have to evaluate your being considered as a candidate to address this matter with the U.S. Tax Court without submitting to their jurisdiction. It's imperative for any American national to realize that any levy can only be resolved by addressing this issue with the U.S. Tax Court after meeting our 5 strict criteria. We have over 2,000 client cases that have been taken to the U.S. Tax Court, and our clients have won against the IRS fraudulent claims on every occasion. We protect you from accidentally submitting to the territorial jurisdiction of the tax court and the IRS, and the outcome has been the receipt of a court order of dismissal for lack of jurisdiction against the IRS fraudulent claims. For more information, visit our website, Weiss+Paris.com, and please be sure to subscribe to our YouTube channel to view our entire library of videos. Thank you for watching.